Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Friday. We made it to the end of the week. Wow, this week went by so fast. There was so much going on. The Fed came out. It was exciting. All right, so what we got going on in the markets today? Well, we're down a little bit, just a little bit, down 50 on the Dow, 50 on the NASDAQ, nothing major. So what's going on? Okay, well, we got the moving averages on the S&P. The S&P is what I like to trade. All right, so the 200-day moving average is at 3,900. Now the 50-day is at 4,000. Okay, so 3,900, and we're kind of trapped in between the two, right? So 3,900 is support, but 4,000 is resistance. So what direction are we going to go? Well, I'm not really sure. I think they might push this up one more time. Now, I do think that the market is coming down. I think that we're going to still take out those October lows. We're going to come down, at least retest them, probably take them out, and that's around 3,400 on the S&P. Now, can we run up to 4,100 first? Absolutely, absolutely. We could run up to 4,100 and then come down, but I think the February highs around 4,150, those are going to hold. We're not going above that. We're coming down, but this is taking a long time to play out. I mean, this whole month we've pretty much gone nowhere. We're right at the start of the month again, and then the month is coming to an end pretty soon, but we haven't moved. The movement, when it happens, I think is going to be violent. I think it's going to be a sharp move lower. All right. Let's get over to the real estate market. Now, real estate market's fascinating. National Association of Realtors came out and admitted that real estate home prices are down year over year. Now, they did spin this in a way saying that it was the longest run-up we've ever had in the housing market. We've gone up, right? Up since, 2012, we just gone straight up, 11-year run-up. But now we're down year over year. Now, what they don't really mention is that in the last 8 months, we've dropped by 13%. 13% in 8 months is the fastest drop in history. Now, there's no other time where we dropped 13% in 8 months. If you know of one, show it to me. But it's never happened before. We're falling at the fastest pace in history. Now, a lot of people don't like to hear that, and I get that. A lot of people in the comments say, Tall Mike, he doesn't know anything. He hasn't been right for years. I love my haters. You know why? You know why I love my haters? They never miss an episode. They watch every episode for the last year, for the last 2 years, and then they tell me how stupid I am, that I don't get anything right. They're the ones watching the stupid man. That's kind of funny to me. But anyways, I'll move on from that. All right, what I'm about to tell you today, you do not want to talk with your friends. You do not want to talk with your family about this. This is between me and you. We can handle the truth. Most people cannot handle the truth. If you want to have friends, do not talk to them about this stuff, but we're in big trouble here. Does anyone think that the banking crisis is over? Does anyone think that they have it under control? If you do think that, please leave me a comment that you think that we're under control in this banking crisis. Look, at the whole thing is about ready to come down. Now, Silicon Valley Bank, well, they're kind of like the scapegoat, right? They get blamed. The management was bad. They had bad managers. I got news for you. Every bank out there was doing the same thing that they're doing. They just did it on a grander scale, if you will. But the one really doing it on the grandest scale is the Federal Reserve. Look, at the Federal Reserve has $9 trillion on their balance sheet. Now, what Silicon Valley Bank was doing, they were not marking down to market. You see, when you have these assets and the interest rates they rise up, right? The assets go down. So if the Federal Reserve had to mark to market their $9 trillion, well, they would be down about $1.5 trillion. Now, who's going to pay that bill? Do you think the Federal Reserve? No, we're going to pay it. Me and you. Taxpayers are going to pay that bill, $1.5 trillion. Do we have $1.5 trillion? No, we'll just go farther into debt. We'll raise that debt ceiling, go farther into debt. 32 trillion become 33, 34, 35, and that's this year. Look, at the debt is just going to explode higher. Now, why is that? Well, because everybody's insolvent. The banks, they're all insolvent if they have to mark their assets down to the market. The market value on their assets have plummeted because of the rise in interest rates. Well, Mike, can't we just lower the interest rates and then the assets will go back up? Well, okay, let's talk about that. You lower these interest rates, you're going to have hyperinflation. You're just going to. Look, they're telling you inflation's 6%. I'm telling you it's above 10% still if you measure it in real terms. Okay, so it's going much higher. Now, why is it going much higher? Because just in the last 2 weeks, we printed basically $600 billion for this banking crisis that we're in. We're still having the run on the banks. I went to my bank yesterday to take some cash out. I'd say you should have some cash on hand. Now, I don't have over $250,000, so I know my banks that, I'm insured for the money, but what's happening is there's a run on these regional banks, and I'm kind of in these lower tier banks. I'm not in the B of A. I'm not in the Citigroup or the Chase. I'm in the lower banks, right? Well, the lower banks, I like them because they treat me better. But here's the thing. They're getting a run on their banks because they're not insured above 250 like Silicon Valley Bank is. They don't have the donors to the political party like Silicon Valley Bank did. So Silicon Valley Bank, they got the bailout. They got all the FDIC money. FDIC doesn't have any money. They're not going to bail out my little bank, so I had to go get some cash out because it's going to take a while for that insurance money to come through when we have these bank runs. You see, the banks are going to go down. There's going to be 100, maybe 200 banks that are going to go down because they're insolvent, and these will be the little banks. And your money's insured up to 250. They're going to print it. They don't have it, but they will print it. But how long will it take you to get your money? Can you handle waiting 2-3 months while your bank's closed? Now, your credit card may be attached to your bank. You go to the store while your bank's closed. That credit card's not going to work anymore. The credit system is going to freeze up. It's not a pretty picture right now. Now, do we have bigger problems than this? You see, my friend was asking me, he goes, well, Mike, what about credit unions? I'm in a credit union. Is that all right? No, it's not all right. They are doing the exact same thing. They have bad, toxic assets that have gone down in value. Now, credit unions, they made most of the car loans. Car loans, people were out there buying them for $85,000, but the car was only worth $60,000, so they'd get a loan for $70,000 on that car. Well, that car is now worth $50,000, but the loan's still $70,000, and they're repoing about 15,000 of these a day. Well, how do the banks get their money back? How does the credit union get their $70,000 back? Well, the problem is they don't. They sell the car for $50,000, and they'll be lucky to get $50,000 of it back. You see, they're going to have to take a hit. They're going to have to take a loss. And if they had to mark these losses down, they'd be insolvent right now. Once again, this is just my opinion. Scary stuff. I'm not saying to go out and do a bank run. I am saying to have a little extra cash on hand just in case you have to survive for a month while the Fed cranks up the printing presses. They're going to crank them up, right? All right, so we got the car loans are bad. The bonds have collapsed, right? Because the rates went up. We got home loans. All the banks, they made you these home loans at 3%. Where are mortgages now? 7%. So what happened to the value of these loans? Well, they went down. These banks are insolvent, the ones that are holding the home loans. Okay, so they're insolvent. But what is really going on with the regional banks? The regional banks, it's the commercial properties. Commercial paper. Look, commercial properties are not financed for 30 years. They're financed for 3 or 5 years, right? And they have to redo. It's kind of like an adjustable rate, if you will. Well, 3 years ago, where were the rates? They were low. Where are they now? Well, they're high. Well, when the owner of that building goes into the bank, goes, hey, look it, my building, it's half empty now because everybody's working from home. So my building's so I'm not getting as much rent in, but I need to refinance this, right? Can you give me a good deal? Well, no, we're not going to give you any deal because you're not bringing in the rent to support the higher payment. But so what happens? Well, the bank's got to take this building back. It's a commercial building. Let's say it's an office building. It could be a shopping center. 1 out of 3 tenants are not paying their rent. So how does the landlord make his payment when he's got to go into to refinance and explain that 1 out of 3 people are not paying rent, well, there's a problem, right? There's a problem. So they got to give the shopping center back to the bank. Well, what does the bank do with it? They don't want to do anything with it. Look, a house takes right now, you can sell a house relatively quick. But to sell an office building, no, you cannot sell the office building quickly unless you have that fire sale. And the fire sale's coming. The prices will be reduced and that fire sale's going to be coming. These are a problem. They're a problem for the banks. They're a problem for the credit unions. They're a problem for pension funds. Pension funds are in big, big trouble. They're a problem for the insurance companies. Insurance companies are going to be in big trouble. This is all on the verge of a financial disaster. We're in the middle of it right now. Now, people think, oh, well, they got it under control, Mike. They went in, they bailed out Silicon Valley Bank, all those billionaires that contribute to the political parties. They got their money out. They weren't insured, but who's that going to cost? Going to cost me and you. They're already costing us by printing of the money. So what happens when they print the money? Well, this inflation number takes off. And they can't print enough money. You don't understand really what's going on. A lot of people don't understand this. You see, all right, so there's 22 trillion with the T of deposits in the banks, right? But there's derivatives on top of derivatives on top of derivatives of all this money, of bonds, derivatives on top of derivatives of bonds. I mean, yeah, the TLT would be a derivative of the bond. And then you have options on the TLT, which be a derivative of a derivative, and they have derivatives of derivatives of derivatives. Okay, this is a little bit complicated. It's really not. An 8th grader can figure this out. But these derivatives, they're not $20 trillion. Can you say quadrillion? Quadrillion. If you print a quadrillion, it's not going to be enough money to bail everybody out. So what happens? Well, what happens is we start to hyperinflate, or you let everything come crashing down. The houses, the shopping centers, the office buildings, everything, the stock market, everything comes crashing down 80, 90%. Not the 50% off that I'm talking about in the housing market. Everything would have to crash. But you see, now when you think about this, who are they going to bail out? Okay, the rich people, they own the assets, right? And the poor people are the ones that get hurt by that inflation number. They can't buy food. They can't buy eggs when they're $100 a dozen. They can't buy a loaf of bread when it's $50. And that's what's called hyperinflation. In a lot of countries, that's what happened before the money goes away, before they lose the power and they have to start a new currency. In other words, they chop zeros off of what you have. A $100 bill will be the new dollar, right? Okay, so that's what's going to happen. I mean, it may, and that dollar, well, it would look like $1 for eggs, but no, it's $100 that you're going to be paying for a dozen eggs. So they're going to inflate this. Now, you've got a little bit of time, but when it happens, it can happen overnight. Do you know how quickly Silicon Valley Bank went down? It went down in basically one day, $42 billion bank run, one day, and it went down hard, right? And the system can come down just as fast. This is scary stuff. You don't want to talk about this with your friends, right? But there's going to be this credit crunch coming. The credit's going to freeze up. Look, at the banks, everybody's taking their money out. There's been a run on these banks. So when you come in, you want a car loan, you want a house loan, the banks are going to go, well, your credit doesn't really look that good, but I have 800 credit. Yeah, but it's really not good enough to get the loan. You see, you're going to be tightening up. They're going to be requiring, well, you don't have enough income. Yeah, I make $300,000 on my job. Yeah, we'd really like you to make $500,000 to get this loan. Look at the credit. There's going to be a tightening of the credit markets. And when this does come down, that's why I say have some extra cash laying around, because your credit cards won't be working because they're all tied into the system. They're tied into the banking system. Now, I know this isn't a pretty picture for a Friday, and I love Friday. We got the whole weekend ahead of us. So, I hope I didn't depress anybody, but if you like this stuff, this is the right channel for you. If not, maybe you should switch the channel. If you like it, though, give me a thumbs up. Why not? It helps that algorithms, helps me get more people to watch. We got over 2,000, 2,000 people watching me. That's crazy. I got those haters. They never miss an episode. Never miss an episode. Anyways, get out there, everybody. Have a great weekend. I'm Tall Mike. Bye-bye.